Now coming to the second question. So this is the explanation that I have given. So option A is increase in the reserve ratio prevents bank from lending more money and reduces the money multiplier, and all other options we have already discussed. You can just read it and get more clarity. Now coming to the second question. The second question is, which of the following is not included in the assets of a commercial bank in India? So option A is advances, option B is deposits, option C is investment, and option D is money at call and short notice. Now let us discuss. First of all, the question is about assets of a commercial bank. So friends, when you are solving the question, please underline all the important keywords. Now the question is about assets of the commercial bank. Assets means any property. So I am telling you the general meaning of the assets. So assets means any property over which the bank has its rights and also gets some income from that property. It is a source of income also. Now coming back to each of the option. The first option is advances. Advances basically means the loan which have been given by the bank to its clients. Second is deposits. Deposit means the money which has been deposited by the bank's customer into the bank. Third is investment. Investment means the amount which has been invested into the market, maybe in the form of government security or any other security. Last is money at call and short notice. So this is the money transaction that happens between the bank. For example, the Punjab National Bank and the State Bank of India, they can transact money with themselves for a short period of time. Now let us see each of these, how does they impact the assets or the liability. What are the implications in terms of asset and liability? First of all, we have to understand the balance sheet of the commercial bank. What is the meaning of balance sheet? Balance sheet is a statement which reflects the assets and liabilities of the bank. What is the asset? Again, asset is a property. It is a property and which also has some source of income. Liability means the amount which is obligation. The bank is supposed to return it back to some person, right? And now let us see each of them, that is asset and liability. So under the asset we can see investment, the amount which is deposited by the bank for buying some securities, for example the government securities. Loans and advances which is given to the customers. So these are the assets because bank has given to the customer and customer will return it back in the future, and customer will also give the interest. Similarly, investment is an asset because the bank has deposited in the government security and government security will give some annual income, as well as the bank can sell the amount of this amount and get back the money. Then on the left hand side we have deposits. Deposit is the money which has been deposited by the customer in the bank. So now the bank has received the amount, it is supposed to pay it back whenever customer demands or after a certain period of time. So deposits is a liability, it is not an asset. It is very clear. So this was a brief overview of the commercial bank. Next one, let us see the complete overview of the balance sheet. So now here again we can see money and call and short notice. Money at call and short notice, this is the money which is transacted between the banks, among the banks, right? And here we can see the investment, here we can see the loans and advances. So all the three items are assets and only deposit is the liability, right? So let now get back to the question. The question is, which of the following is not included in the assets? So the option is deposits. So deposit is not an asset, it is a liability. So I hope you get the clarity here also. Now you can see deposit is a liability, loans and advances is the asset, investment is the asset. Coming to the question number 3, the service area approach. So this question is belonging to the banking sector, and this question also belongs to the India yearbook and the government scheme. Now the question is service area approach. So this is name of the scheme. This scheme was introduced by the Reserve Bank of India in 1989, right? So let us see first of all the options and then we will discuss. The first option is Integrated Rural Development Program, IRDP. Option B is Lead Bank Scheme. Option C is MG Narega, and option D is National Skill Development Program. So prima facie, if you don't know that this service area approach is a scheme of the government in the banking sector, you might really get confused between these three options, because Integrated Rural Development Program is for the rural area, so this can look like it is area based program. Lead Bank Scheme is for a particular district, so it may also look like a area program. And Mahatma Gandhi National Rural Employment Guarantee Scheme is also the rural focused scheme, so it might also look like a service area. But the question is not that the question is not a very general question. This is a very specific question. Only if you know that there has been a scheme of service area approach, then you can answer this question easily. So let us see the service area approach. The service area approach is a scheme which was launched by the RBI in 1989 for the development in the rural areas. So it is an improved version of the area approach of the Lead Bank Scheme. So earlier this is called as the area approach. Now this is called as the service area approach. And what is the purpose? Under this, the branch in the rural and the semi-urban areas, they are supposed to serve, they are supposed to give the service to 15 to 25 villages for planned and orderly development of the rural and semi-urban areas. So this is the main purpose behind the service area approach. So the bank branch will serve, it will give the service to a particular area. That is why this is called service area approach. And the answer is, so this is about the Lead Bank Scheme. Lead Bank Scheme, I think we are not supposed to go into detail. Lead Bank Scheme is one of the scheme for the financial inclusion, and the purpose is actually and to ensure that the benefit reaches to the poor, and under which there will be one bank for each of the district which will be taking as the lead, and they will take care of the entire district's banking habits. Now the answer to this question is Lead Bank Scheme, right? So you can see that you need to have the conceptual clarity as well as you need to have the complete idea of all the government schemes. The next question is, what was the purpose of inter-creditor agreement signed by the Indian banks and the financial institutions recently? This question is belonging to the current affairs, purely current affair. And non-performing asset, NPA, is a big problem in the banking sector, and the question is always expected from this area. So this question is not a surprise. This is very much expected question, and this question is also one of the very easy question. So first let us understand what is the meaning of creditor. So creditor is any person who has given the loan to other person. So in this case, the creditor means the bank or any financial institution. The bank or any financial institution, when they give the loan to some client, so in that sense they are called creditor. Now coming to the inter-creditor agreement. So this NPA crisis is going on, and this was at its peak in the last couple of years. The banks and financial institutions, they had given a lot of loan, but the clients are not coming back to pay their loan. So what the bank and financial institutions are doing, they are cooperating with each other. They are signing an agreement with each other that how can we come together and resolve the loans which have been taken combinedly from the different institutions by the single client. So when a single client has taken the loan from multiple banks and financial institutions, then the banks and financial institutions, they sit together and they decide the mechanism that how to resolve this loan. So this is a very specific question. So let us first understand or see the options. To lessen the government of India's perennial burden of fiscal deficit and current account deficit, this is far-fetched option, not at all correct. To support the infrastructure projects, not at all. To act as an independent regulator, not at all. The only option is, the aim is to fast resolve the stressed assets of rupees 50 crore or more which are under consortium lending. Consortium lending is very, very important term. Consortium means a group of banks who jointly give loan to a single buyer, single client. For example, there can be any power project. That power project requires 10,000 crore rupees. Single bank is not in a position to give 10,000 crore rupees to the power project. So that power project will go to the multiple banks and will request that please come together and give me 10,000 crore rupees loan. So they come together, they sit together and they give the loan. Now when the buyer is not able to return back, then they sit together and work to resolve it back. So these are the details of the IECA. So this is an agreement among the banks that have dues from the borrower in stress, and this is applicable only in case of the corporate loan above 50 crore rupees. So the answer is option D. The answer is option D. Now, the question number 5 of the banking sector. The chairman of the public sector bank are selected by. So chairman is the chief, and public sector bank means the bank which are in the government control, right? Option A is Bank Board Bureau, option B is Reserve Bank of India, option C is Union Ministry of Finance, and option D is Management of Concerned Bank. Option A, Bank Board Bureau. Yeah, this can be one of the option. Reserve Bank of India, oh, maybe this is an option. So this is actually a factual question. Only if you know that what is the function of Bank Board Bureau, you can solve this question. Also, if you know that the selection of the bank, the public sector bank chairman is not done by the RBI or the Union Ministry of Finance, then also you can solve this question, right? So Bank Board Bureau was introduced, and there are many work of the Bank Board Bureau. One of the important function of the Bank Board Bureau is to recommend selection of chiefs of the government-owned banks and the financial institutions. This is one of the very prominent function of the Bank Board Bureau. To recommend, the answer is, the point is to recommend. To recommend. It is not selecting. It is recommending selection of chiefs of government-owned bank and the financial institutions. Now going back to the question, when we go back to the question, we will find that Bank Board Bureau is not selecting, it is just recommending. So who is selecting the bank chairman? Actually, the bank's chairman is selected by or appointed by, the more appropriate term will be appointed by the Cabinet Committee on Appointments. The Cabinet Committee on Appointments, which is headed by the Prime Minister of India, is the appropriate body which is actually appointing the bank chief. However, that appointment is based upon the recommendation of the Bank Board Bureau. So in this case, RBI is not the right option, Finance Ministry is not the right option, Concerned Bank Management is not the right option. So the best option is Bank Board Bureau. So Bank Board Bureau is the best option, right? So answer is Bank Board Bureau. So answer is option A. So with this, I complete the discussion of banking sector, and I will be discussing the more areas, the external sector, the government schemes, the inflation, and all other areas which have been asked in the UPSC Prelims 2019. I hope you are now more confident about how to go ahead with the preparation. You are more clear that conceptual and factual both type of question are being asked. The questions are from the traditional part also, for example service area approach, and the recent part also, that is a intercreditor agreement and the bank board bureau. So with this I complete this. Thank you very much.